Well, it happened again for the third time this year. The Fed lowered the federal funds rate by 0.25%, and mortgage rates actually got worse the next day. This video is to explain why this keeps happening. So by the time the Fed actually meets to decide what they're going to do, a lot of economic data has already filtered in, and the markets somewhat predict what the Fed is going to do. So, for example, the last three sessions, the jobs report has been really weak. So the market expected that the Fed was going to lower the federal funds rate by 0.25% each time. So what I mean by that is that the stock market and the bond market are trading based on the expectation that the Fed's going to lower the rates 0.25%. What happens on the day that the Fed actually lowers the rates is Fed Chair Powell speaks after he lowers the rates, and he gives an indication of what's going to happen down the road. In particular, this time around, he said that it's not a foregone conclusion that they were going to lower rates in December. And then he went on to say it's far from it. This time around, Fed Chair Powell stated that lowering the rates in December was not a foregone conclusion, and he took it a step further, and this is what really moved the markets. He said, it's not a foregone conclusion, it's far from it. Those three little words really sent the bond market into a sell-off, and that's what triggered mortgage rates to go up by about 1/8% the following day. I would expect that once the federal shutdown's over and they can extract employment data, then we'll start to see the market anticipate another federal funds rate cut in December, and we'll start to gain back the ground we lost over the last 48 hours. I would say if there's any advice I can give, if you have a loan and it's not locked yet, approaching the next Fed meeting in December, I would lock it in before the Fed actually lowers the federal fund rate 1/4 again, because more than likely he'll say something that would allude to the fact that he's probably not going to lower rates again, and the market will lose ground again and mortgage rates will go up again, even though the Fed lowered the federal funds rate.